Are you one of the many busy professionals working in offices day in and day out? Do you wonder how some people grow their wealth fast, retire early, and play on workdays? Well, you're in luck, because Ginny Bowling hosts this show, Pivot to Prosperity, where she interviews people that can do just that. Play on workdays. Many guests have become financially free. She also interviews people that are on their journey and people that are in support roles, like attorneys, contractors, brokers, and others. Commercial real estate is the common element. She is on a mission to be sure busy professionals know they can own substantial commercial properties too, like apartments, self-storage facilities, and others, and not have to do the work managing them. Passive investing is the key. Syndications are the typical method. Tax write-offs are some of the biggest rewards. Ginny and partners find the deals, build a strong team and business plan, then offer the investment opportunities to passive investors. New episodes are released every Tuesday at 12, so watch for new releases. If you want to get involved, let us know. You need to get pre-qualified to hear about most deals. See the show notes for contact information.
Hello. Ginny Bowling here. And this is Pivot to Prosperity, brought to you by Pivotal Real Estate Investments. And we help our investors build wealth and income while improving communities. And today we have Jeremy LeMere here. And Jeremy, thank you for coming on. I appreciate it.
Thanks for having me, Jenny.
You're welcome. I'm going to go ahead and read your bio. And then as you listen, if there's something you want to add, you just do that, okay?
Sure, you bet.
Jeremy is a real estate investor and operator of multifamily commercial and self-storage facilities in Northeast Wisconsin. Jeremy began his real estate career over a decade ago, rehabbing single-family and duplex properties. He continues to use his construction and engineering skills to implement value add and new development projects. Jeremy began investing in apartments in 2018 and added self-storage facilities shortly thereafter. The company owns and actively manages a portfolio of assets through a privately held management company, Star Property Management Group. His focus is on syndication activities, centers around achieving higher returns for co-investors through the acquisition and operation of stable cash flowing real estate under the Navigator Wealth Fund umbrella. And very good. So thank you, Jeremy, and welcome again. Anything that popped out at you that you should add to that right now, or that you feel should be said?
I think the interesting part is probably the progression that folks really should recognize is, where you start out organically on your own. You may be working your W-2 and then expanding your real estate. You get to a certain point where you need to kind of get to scale, right? For exiting that W-2 position and making real estate your full-time activity. And that was kind of my step into syndication when I needed to create more scale. I didn't necessarily have all the equity to make it all happen, but we leveraged syndication in order to bring that to fruition. And then over the years, we've kind of graduated and grown the portfolio even further, but now we're reaching the point where syndication is kind of a choice rather than necessarily a must in order to continue to grow. And at some point, you really want to figure out how big do you want to get. And we could continue down the syndication route and get massively large, lots of employees, or we can decide to kind of maintain a certain size operation, because I'll call it the headaches that come with a certain size operation are probably more manageable than a very large organization. So
yeah, there sure is a tipping point kind of there in a way based on the team and all the rest and location. But yeah, the ideal is to pick and choose. You don't have to, it's a toolbox,
Yeah.
Yeah, and syndicating is costly, so you have to have a big enough property, of course, for that. But
yeah, once you have a few really good investors that you're working with that really trust in the activities that you're doing and like the market that you're active in, there's a great opportunity to do a lot of activities just as joint venture activities, smaller scale things, kind of diversify a little bit from having multiple assets rather than being concentrated in really big things. But that diversity allows a lot better management and activity and the ability to enter into some smaller things, local things.
Yeah, absolutely. And So I spend a little time always with my guests talking before we get on the show. And I think you should add to your bio some background, more background to even, I know that was your short version, but I think it's imperative for people to know that you're a real strong systems. And how did I word it before? It's
Yes. Systems and
yeah,
operations.
systems and operations. You go deep into those, and
Yeah. Yeah, it's kind of been my natural strength, right? Is I come up with an engineering background, but early on in my life, I started in kind of the agricultural space and out, finding ways to do things, figuring out how to fix something or just how to get by for the day until you could get back to the facilities in order to actually repair things properly, right? So you get creative with things, and that process of getting creative and finding a path to get stuff done kind of carried with me. I did my engineering degree at Michigan Tech up north of Green Bay here, and spent a lot of years after that using that engineering degree to figure out new manufacturing processes and how to streamline and optimize the production process for a Fortune 50 company that I worked with for a good number of years. And in those processes of trying to streamline and make things more efficient, we learned a lot of skills. I was able to get continuing kind of education, everything from Lean Six Sigma type activities to call it classic Zig Ziglar type stuff from way back. Just how to do troubleshooting and how to do things methodically. And all of those skills just have continued to carry forward with me and kind of wired my brain to think in a very systematic way.
Using just that Six Sigma terminology even demonstrates to many of us that you're used to digging deep and true systems and synchronization and all of that gets in there. But you even touched on something that makes me laugh a little, because was there a course in being a MacGyver when there's no tools?
I I I don't know, but it was a show that I watched as a kid. I can tell you that. So there may be a little bit of that in there, along with the A Team, if you remember back that far too. So
Yes, I do. I do. Yep, I love it. Yeah. So me being a Virginian, the other name, the less complimentary name is being a redneck.
Oh yeah, yep. Yep. We have in the north we have the same, is it red green? Red green and public television space would be very similar to what you're talking about. Everything's duct tape and baler twine. Yep.
Right, right. Yeah, that was my farm. No, quite.
Yep.
Anyway, no, I think that's huge because your specialty is the property management aspect, right?
Yes. Yep. Yep. And
So,
being able to fix things, repair things, and put them back together. I don't necessarily take the duct tape and baler twine approach, but in some cases, that's what gets you by until you can get the right solution in place. And that's what you've got to do, as long as you can do it safely. And then you make your plans, whether it's, long-term capital plans to address the real problem, the root cause, to make the problems go away long-term. Absolutely.
so that ties in with your strategy being value add, I presume, right? So
Yep.
you want to tell us about maybe even a problem or a situation of property or a situation that would illustrate like your kind of
Yeah. Yeah. The first apartment complex that I bought was, it was new to me to have these types of issues in large scale property. So when I first bought my apartment building, I was like, there has to be something that can be resolved here. I didn't know what the issue really was, right? We did due diligence, but didn't know what the root cause was. I bought this property, it was only 80% occupied. And I was like, why is it 80% occupied? We looked at the units, they weren't horrible or anything, the location was good. It wasn't, the grounds weren't a significant issue. And when we did checking at other properties, their occupancy levels were significantly higher. A lot of them had waiting lists. So we purchased the property and we set out to start to fill units, and we were turning some of the units. We thought maybe we got to put some appliance packages in it or whatever in order to get these units filled up. So we did that on one unit, really couldn't rent it for more money, but we were able to rent it. And then we continued to fill units. The thing that I found, back to that situation where I get myself involved at the detail level to figure out what's going on. I actually took over because I had been running a portfolio. I was doing a lot of showings at this property. In reality, I had brought on board when I bought the property, the existing property manager that was working part-time. I'll call it very part-time, right? Because it wasn't very big. But what we quickly identified was the fact that there were two major issues. She was showing the property when it was convenient for her, creating problems for the individuals that may have wanted to see the property. Number two, her primary job was actually working at one of the local bars. So the clientele that she was generally inviting in to get residents from was the bar. So you weren't necessarily getting the right tenant base. So we had kind of two situations and dynamics going on there with the wrong individuals getting there and then not filling it in a timely fashion. So it didn't take very long, and we got those units all leased up, and we held effectively 97% occupancy kind of for the next 2 years after that, because we were really diligent about showing units and having them effectively filled by the time they went vacant. So, we uncovered a tremendous amount of value in that particular property. We didn't know exactly what the issue was up front, but we knew that the market shouldn't have commanded that. And we made those adjustments, and ultimately, within I think it was around 8-9 months after we transitioned the property, uncovered that, we figured out all of the other information we needed to know specific to the asset, and we transitioned off of that property management individual and let her go ultimately.
Right. Yeah, that probably was also adding some delinquencies too, if she was getting
Exactly. Exactly.
Yeah, yeah, it takes rolling up your sleeves sometimes, I think too. Really, it's important. But most especially, I mean, any of us doing value add, if you can't execute on the business plan with the turnovers and keeping it full or as close to full as possible, the rest of it's not going to happen.
Yeah. Yeah. Revenue is number one.
Yeah,
All the other things will fail if you can't get revenue to be in line. You
right.
can only short term deal with some of the cost cuts, and some, there's a lot of them that you can't make go away. They're just there no matter what. They're fixed costs. So
Now, do you do third-party management for anybody else or only for yourselves?
we only do management for ourselves.
Okay.
How do I want to say? Um, nicely that we believe that we can care for our assets better by dealing with our own assets, and then taking our eye off of our A game to spread that thinner across other assets without having some other obvious upside. And we haven't found a reason, I'll call it scale wise or otherwise, to create that upside. It doesn't make sense to complicate it with outside properties that don't benefit us internally with making decisions. Do we do this or do we do that? Well, we only want to do the stuff that's for our assets. We always want to be making the best choices across our assets.
Right, right. So, how many assets do you have right now? How many properties?
Yeah, we're at about 65 residential units now. We've scaled back single family and duplex properties, but we're kind of in that sub 100 on the multifamily side. And then we've got 1,000 self-storage units, and we've got around 12, 13 commercial units that we also manage.
Commercial units. What do you mean commercial units?
Yeah, so we've got several properties that have storefront locations, so effectively, I'll call it strip mall like thing, all exterior entrances. It's not an actual interior mall, but those buildings are split up into multi-tenant spaces, which is nice from the standpoint of it allowed us to get into commercial without having a single tenant risk. What I mean by
Love
that
it.
is,
Yeah,
yeah, you have
right.
a single vacancy and all of your income has gone on a multi-million-dollar asset.
Yeah, we call those strip centers here. And yeah, yeah, I like those too. I'm looking more and more at those. Retail is really coming back in Orlando.
Yeah, we're very keen on the prime location. So if there's a economic pullback like there was during COVID and that sort of thing, or the Great Recession, you just want to make sure that you have assets that are high, I'll call it highly prized, for locations where people exit the I'll call it the subprime traffic areas, and actually move into, because then they can rent cost effectively into a high traffic area. They're going to want to move up, but a lot of cases, you know, when the economy and the market is going really good, they can't afford to rent in those spaces, or they're not available and they have to take second tier locations. So we try
Right.
to get all of our properties in kind of first tier locations, so that they have the best demand and, you know, highest probability of occupancy even in slowdowns.
So how many of you are operating all these properties?
Yeah, so there's myself, an assistant property manager, and I have two virtual assistants that work with me, one kind of primarily on the accounting side and another on just primarily driven on the customer service side, phone calls, move-ins, move-outs for storage and that sort of thing.
Yeah, the multifamily is the most demanding though, isn't it?
Yes, it is. From a response time scenario, we have a lot of call activity and stuff related to storage, but it's very quick, short turn type of activity. 5-minute call and you're done, and the situation is addressed for the most part.
Are
Yeah.
you automated on that property or those properties?
For the self-storage, we use the common software platform, so most rentals are addressed touchless,
Right.
but we still have individuals that want to call, they want to make paper payments and things like that. We still facilitate all of that through the VA process. But generally speaking, we try to automate, like you said, where we can. In our management side, we leverage AppFolio. Speaking of processes, I was making a significant portfolio change, and we were stepping up from around 20 units and we were going up to over 70 units in a pretty short window of time of like 6 months. And what was interesting, we got on board with AppFolio about 2 months before we started the acquisition of those other assets, and got used to the platform, got my VA all used to it. And when we got done doing it, the workload actually went down with more units from a management and paper standpoint, because all of our leases went digital. All of the data processing all happened automatically through the system, and everything just kind of, we then eliminated having to meet people in person to do paper signatures, hard signatures on paper copies of leases with all the tenants, because they can all do their signing remotely at whatever location they're at. So it really helped, streamline things for us by implementing those systems. And, being like this week is Thanksgiving, we'll have people renting units potentially on Thanksgiving Day, Black Friday, and all weekend afterwards. And I don't have anybody on the clock during that period of time. So
That's awesome. Yeah, that is. I like self-storage a lot too. And strip centers, like say warehouse. I like flex space a lot too.
yes, I agree. In
Yeah.
that small to mid business size, that's dealing with all the construction and residential activities, plumbers, electricians, and all those sorts of spaces, on up to even the medium size. They're all very good hot markets right now for all the, I'll call it startup businesses or individuals that are going into business and need a space dedicated for equipment and parts and things like that.
Are you getting tenants in those strip centers that are medical office oriented at all, or?
We're not in that space. That tends to be newer flex space or office space.
Yeah.
We're not quite into that. We don't build the assets for them, but in many cases our clinical stuff is almost always new construction.
Your clinical stuff?
Yeah, like secondary doctor's office facilities and things like that. Dental offices, they tend to be built from ground up for the application and not
Oh, okay, you mean
necessarily
in
new.
general. Okay.
Yeah, yeah,
I was thinking you're clinical, but I thought you said you did. Okay. Got
yeah.
confused.
We tend to have secondary things like title companies, small, like the protein shake shops and things like that will end up in our facilities typically.
Right. Good, good. Okay. So AppFolio is, I guess, one big aha thing for you. Is there anything else that you would say that's helped you systemize your operations more than anything you can think of?
Uh, the software side has been huge, and we leverage that across. We leverage that space all the way into our fund of funds application with managing accounting processes.
Oh,
We still foundationally live on a kind of a QuickBooks roll-up platform. But generally speaking, even our storage software directly interfaces with QuickBooks and passes that information directly into the software. So wherever we can aggregate information and data into, as few streams as possible, and so that we don't have to cross the information from one system to another, either manually transferring it or just trying to reconcile it, right? And keeping the two in sync so that they're accurate on both sides, because one is your customer facing side and one may be your accounting facing side in the roll up. So
how's it been with using VAs? Have you been able to find them already experienced, or are you training, or what are you doing?
um typically I've been training them, but I like them to have a broader set of experience. And what I mean by that is I like to have, like, my the first VA I had came actually from the residential real estate sales side. So they worked with realtors. So she was knowledgeable about individual, homes and assets and what the property appearances look like and things like that, versus somebody in a foreign country that doesn't even have any understanding of what building layouts and, what street names and address nomenclature. There's a ton of stuff. Like, we write addresses in the US postal system differently than other places of the world. And that has some fundamental benefits. You wouldn't think so, but we take for granted that, we trained everyone in our schools to write addresses the way we know addresses to be. They don't have addresses in that same format. So just simple mistakes can start happening when there's, entering information into systems if you don't have some foundational knowledge that they bring to the table.
Very true, very true. Now, you mentioned one other thing too that I want to be sure that we have time to touch on, and that is you have a fund, I think, that you said you're creating, right?
Yep.
You want to talk about that a moment?
Sure. Our Navigator Wealth Fund, we started about a year ago, and we're actively doing basically lending out of that platform, and it's the platform that we will do forward-looking syndications for multifamily storage and that sort of thing. Ultimately, it allows investors to come in and they enter the fund itself, and then they can elect, in our particular fund, they can elect to hop into one of a number of different potential investments that are there. We have current investments for example, in a mezzanine debt product, and they can still actively get into that particular fund and get into that specific investment vehicle and make over a 12% return in that particular platform. So it's really nice to be able to give people options within the fund, and by having call it open available subscription for those individuals as they come in has been great. My business partner Michael and I both have a fair amount of funds that we place in the fund itself, which allows us to kind of precede the actual investors that may come in later, and they can ultimately get into that fund, replacing our capital and allowing them to then benefit right from day one of entering the fund. So that's been a primary goal of ours, is to start to migrate to the fund of funds level investment strategy, because of the simplicity and the roll up that it helps us manage, as well as our investors, so they can see all of their information in one place.
So I think you're describing a customizable fund, right?
Correct. Yep.
Yeah, that to me is the way I'm getting ready to go to, because I love the fact you can have different assets for people to choose from, and it's 1K1, right?
1K1, yep, one PPM and one subscription that they're in, and then they can look at and review the detail level stuff for each individual investment that they may want to participate in.
I was just thinking, actually, with the fund that has the debt side, can you still really do 1K1 when you're doing?
You're going to get 1K1, but you're going to have revenue or profits in more than one box. on the case.
Oh, that's it. Right,
Yeah.
right.
So
That makes
it's
sense.
not going to be a passive investment like a real estate syndication would. You're going to have, I'll call it active or distributions that are coming from the interest that you're earning, right? So it's a different box.
For that. But then in that same K1, you can have passive as well, right?
Correct. Yep.
Yeah,
Yep.
that's true. Yeah. I hadn't thought about that, but
Yeah.
that's
Yeah.
good.
We actually, in some of our syndications, actually leverage investment strategies for the cash. That's a little bit different than most folks leaving it just in a bank account. You know, we don't have to place our money into an account and just leave it there for our lenders. Because if you're not using Fannie Freddie, you have some flexibility in where you keep your funds, your extra cash. We actually invest that money at higher rates of return, which then ultimately generates that same type of distribution through our general syndications. So in those cases, they also see more than one box of income on those particular statements, but it really does help the performance of the overall investment. Yeah, you're going to have a situation where you're getting money in a different box, but I'd rather have that money than not have the money just to forgo getting the number in a box.
Right. And still with the same person, the same team, the
Exactly.
um same fund, you're able to be able to get those advantages. And I
Exactly.
think that there's a lot of benefit there.
Exactly. We haven't had any pushback from that reality yet. I think especially at this point, everyone's like, if I'm making money in my base investment and I'm making upside on the cash that's at hand, those are really good problems to worry about.
The only trick for some people is the word fund. It's kind of a new model
Sure.
coming out that people are not used to, but I think that it's getting so frequently used now
Right.
that people
Yeah, and we're not a blind fund. We're not taking
Right.
your money in and you don't know what you're investing in. If
Yeah.
you invest with us and you haven't decided what you're going to invest specifically in, you can sit in a holding pattern waiting for that particular investment you want to be in. You don't have to take whatever we put in the fund as, as a requirement. It's an option.
Yeah, very good. All right, so I need to ask you that as we're wrapping up here, the big question I ask everybody, and that's, is there a pivotal person or event that has brought you to where you are now, or that's pushing you forward to a certain goal?
Yeah, for me, it's been Brad Tacia. I was with early on when I was transitioning from single family duplexes, I had a limiting belief of multifamily that just was out of my hands to be able to get into a property that big. And it was a great opportunity to get into our mentoring program. And Brad Tacia was my mentor in that program. Paid as it was worth every minute of it because it got me over that limiting belief and got me into multifamily, ultimately led me to syndication and our full portfolio that we have today. But he was very, very knowledgeable and able to put it in simple terms that you can accomplish this. This isn't something that's outside of your realm that's unreachable for you. So
Right. And as we've said, we will recognize that person as a pivotal person to you. Now, do you want to nominate them to actually come on the show as a pivotal person?
I'd love to do that.
That'd be great.
Ultimately Brad's decision, but certainly would love to have him recognized for that.
All right. So we can make arrangements when we go off the air, but that's fantastic. And how do you spell the TASIO?
Tacia, Brad Tacia.
Nice. Well, and was he local in Wisconsin?
He's actually in Michigan.
Michigan.
Long way from here by by road because you got to go all the way around Lake Michigan. But yeah, he's up in the upper Midwest area also.
Nice, nice. Okay. Very good. Well, so why don't you go ahead and tell people how they can reach you? Remember, now this isn't necessarily just visual. A lot of people are
Sure.
audio only, so go ahead and
Yep.
spell anything.
Sure. Yep. You can always reach out to me, and I like to keep things simple. We've had this discussion before, a little bit of acronyms, but very direct. My email address is jeremy@lemere.com, just as it is on the screen here. Jeremy@lemere.com, or you can always connect with me and schedule a session at navigatorwealthfund.com or navwf.com, navwf.com for Navigator Wealth Fund. And love to speak to anyone who has an interest in learning more about what we're doing or want to be a partner in what we're doing. We're always looking to connect with folks and better our opportunities and offerings for our investors too.
Great. Well, it has been a pleasure to have you on the show, and I'm glad to connect. I told you I like Wisconsin a lot. I have family there, so I want to stay in touch. And so the
Excellent.
contact information will also be in the show notes, though. And
Excellent.
so thank you for coming on.
You bet. Thanks for having me.